Money Tuesday. Over the last year now, we've seen an uptick in the use of home equity lines of credit. It's a way for homeowners to liquidate some money quickly if they need it, but you can't just throw caution to the wind. Marshall Clay with the Welch Group joins us now to talk about the do's and don'ts of this. Good to see you this morning.
Hey, good to see you, Mike.
Yeah, it sounds like almost like the way it's sold, if it comes in the mail to you or something, it's like free money, and it's not.
Exactly. I mean, you own your home, and it's just a way for you to tap into the equity that you've already built up in your home. And so, yeah, it's presented in a way where it is kind of like free money, but I assure you that it's not. And I think there's some key facts to understand as it pertains to the home equity line of credit, because I know that a lot of people are stressed out there. A lot of people have racked up a lot of credit card debt. We're actually seeing an uptick in people tapping into their 401k programs for hardship purposes. So consumers are stressed out.
Yeah, because the temptation's there. All right, so what are the do's and don'ts here?
Well, so the first thing to understand about it is it's a variable rate loan, as you mentioned. So that the interest rate on that loan can fluctuate up and down. And as we've seen over the last year, that rate has been escalating up very quickly. So right now it's around 8.5%. You're limited to around 80% of the equity that you have in your home. So for example, if you own a $500,000 home, you have a $100,000 mortgage, you can tap in up to 80% of that $400,000 in equity, $320. Now, not all banks will give you that 80% limit, but typically it's capped around 80%. And the key, as you mentioned as we started out, is that this is for very limited uses. Okay, we're talking about emergency liquidity. So we've talked a lot on your show about accumulating that emergency cash reserve, that 3 to 6 months for all emergencies. A lot of people have a tough time doing that. So maybe looking to home equity in those emergency purposes is a great.
So on your screen, you see some examples of where, okay, yeah, I'm a bit of an emergency situation, that's where I should use it. Where do people fall into trouble or could fall into trouble?
So I think where they fall into trouble is when they start spending or using the equity line for frivolous discretionary spending. You do not want to be tapping into your equity line to finance a trip or a new car or anything like that. It's for any of the things that we have listed on your screen right now. Those are reasonable, good uses for the equity line, because as you and I were talking about before we came on the air, things can happen in the housing market. We see interest rates at these really high levels. There's a lot of concern about the pressure on the labor market, and right now we have really tight supply of housing. But if all of a sudden that dynamic changes and the supply of housing dramatically increases for whatever reason, you could see the home values drop dramatically. And that's when people can get underwater and get in a tight spot as they use these equity lines. So be very cautious and judicious with how you use them, but they're a great tool if you use them appropriately.
All right, some good advice today from Marshall Clay with the Welch Group. We do appreciate it. Thank you.
Appreciate you.
All right, we'll be right back.